Welcome to my channel. In this video I want to share with you one of the best book ever about investing, The Intelligent Investor by Benjamin Graham. Summary and key takeaways. Also we learn how to apply this in real life with real life examples. 100 most valuable investing books. Summary and key takeaways with real life applications coming soon. If you like it, then consider subscribe and press the bell icon. Thank you so much. You can also read our blogs and also check this book. Link in description. Thank you. The Intelligent Investor by Benjamin Graham. Book summary and key takeaways. A timeless guide to financial success. The Intelligent Investor, written by Benjamin Graham, is widely regarded as the Bible of value investing. First published in 1949, its principles remain relevant and insightful for investors today. In this blog, we'll summarize the book's key takeaways, illustrate its concepts with real-life applications, and explore why this seminal work is a must-read for anyone serious about investing. Understanding the Intelligent Investor, Benjamin Graham, known as the father of value investing, imparted his wisdom through The Intelligent Investor, emphasizing long-term strategies over short-term tactics. The book is not just about picking stocks. It's about cultivating a mindset that can navigate the tumultuous waters of the stock market with confidence and prudence. Key takeaways from The Intelligent Investor. 1. The concept of Mr. Market. One of the most memorable analogies in the book is the idea of Mr. Market. Graham personifies the market as a moody individual who offers to buy or sell stocks at different prices every day. Sometimes, Mr. Market is euphoric and offers high prices. Other times, he's despondent and offers low prices. Real-life application. Consider the 2008 financial crisis when the market plummeted. Stocks of fundamentally sound companies were available at bargain prices. Investors who understood Graham's Mr. Market concept viewed this period as a buying opportunity rather than panicking and selling their holdings. 2. Margin of safety. The margin of safety is a core principle of value investing. It suggests buying securities at a price significantly below their intrinsic value to protect against errors in judgment or unforeseen events. Real-life application. Warren Buffett, one of Graham's most famous disciples, used the margin of safety principle when investing in American Express during the Salad Oil scandal of the 1960s. Despite the scandal, Buffett recognized that the intrinsic value of American Express was far higher than its market price at the time, leading to substantial profits. 3. Defensive vs. Enterprising investors. Graham categorizes investors into two types: defensive and enterprising. Defensive investors prefer a passive approach, focusing on long-term stability and minimal effort. Enterprising investors are more proactive, seeking undervalued stocks through detailed analysis. Real-life application. A defensive investor might follow a simple strategy like investing in a diversified portfolio of low-cost index funds. On the other hand, an enterprising investor could spend hours analyzing individual stocks, looking for hidden gems like Graham's analysis of undervalued companies during his career. 4. The importance of diversification. Diversification involves spreading investments across different asset classes to reduce risk. Graham advises investors to diversify their portfolios to protect against significant losses. Real-life application. During the dot-com bubble of the late 1990s, many investors heavily invested in tech stocks suffered enormous losses when the bubble burst. Those who diversified their portfolios across different sectors fared much better. 5. Earnings and dividends. Graham emphasizes investing in companies with a history of strong earnings and dividend payments. This approach ensures that the investor receives a steady income and invests in financially stable companies. Real-life application. Consider Coca-Cola, a company with a long history of paying dividends. Investors who bought Coca-Cola shares decades ago have enjoyed consistent dividend payments and substantial capital appreciation. 6. The power of patience and discipline. Patience and discipline are virtues every intelligent investor must cultivate. Graham warns against the dangers of emotional investing and market timing. Real-life application. The rise of meme stocks like GameStop in early 2021 demonstrated the importance of patience and discipline. Many investors who jumped on the bandwagon driven by social media hype experienced significant volatility and losses. In contrast, those who adhered to Graham's principles avoided the frenzy and potential pitfalls. Why read The Intelligent Investor? 1. Timeless wisdom. Despite being over 7 decades old, the principles in The Intelligent Investor remain relevant. Graham's insights into market behavior, investment strategies, and risk management are timeless. 2. Foundation for value investing. Graham's teachings form the foundation of value investing. Understanding these principles is crucial for anyone interested in investing, as they provide a solid framework for making informed decisions. 3. Inspiration for successful investors. Many of the world's most successful investors, including Warren Buffett, credit The Intelligent Investor with shaping their investment philosophies. Reading this book provides a direct link to the strategies used by these financial titans. 4. Practical advice. The book is filled with practical advice that can be applied to real-life investing. From analyzing financial statements to understanding market psychology, Graham covers a wide range of topics that are essential for investors. 5. Improved financial literacy. Reading The Intelligent Investor enhances financial literacy, helping readers understand complex financial concepts in a straightforward manner. This improved understanding can lead to better financial decisions and a more secure financial future. How to apply The Intelligent Investor's principles in real life. 1. Conduct thorough research before investing in any stock. Perform detailed research to understand the company's fundamentals. Look for strong earnings, a solid balance sheet, and a history of dividend payments. Example: suppose you're considering investing in a tech company. Review its financial statements, analyze its competitive position, and assess its growth potential. If the company has a strong track record and is trading below its intrinsic value, it might be a good investment. 2. Maintain a long-term perspective. Avoid the temptation to make quick profits through short-term trading. Focus on long-term growth and stability. Example, if you invest in a company like Apple, think about holding the stock for years rather than months. This long-term approach can yield significant returns as the company grows and innovates. 3. Diversify your portfolio. Spread your investments across different sectors and asset classes to minimize risk. Example, if you have investments in technology, healthcare, and consumer goods, a downturn in one sector won't devastate your entire portfolio. 4. Adopt a disciplined approach. Set clear investment goals and stick to your strategy, regardless of market fluctuations. Example, during market downturns, resist the urge to sell off your investments in panic. Remember that market volatility is normal, and staying disciplined can lead to better long-term outcomes. 5. Focus on value, not price. Look for undervalued stocks rather than following market trends or chasing high-flying stocks. Example, instead of buying into the hype of a popular stock, search for companies that are undervalued but have strong fundamentals. This strategy can lead to significant gains once the market recognizes the company's true value. Conclusion: The Intelligent Investor is a treasure trove of investment wisdom. By understanding and applying Benjamin Graham's principles, investors can navigate the complexities of the stock market with greater confidence and success. Whether you are a novice investor or an experienced one, the lessons from this book are invaluable. Investing isn't just about making money. It's about making informed, prudent decisions that lead to long-term financial stability. Graham's timeless advice helps us achieve that goal, making The Intelligent Investor an essential read for anyone looking to secure their financial future. Place comments below. This information is valuable for you. Your feedback is valuable for this channel. Thank you. 100 Most Valuable Investing Books Summary and Key Takeaways with Real-Life Applications coming soon. If you like it, then consider subscribe and press the bell icon. Thank you so much. You can also read our blogs and also check this book. Link in description. Thank you.